One, this is Eric Foley with your weekly mortgage market update. Haven't posted one in a while because it's been status quo. However, today we had a big improvement in mortgage rates. So, the latest report from the Bureau of Labor Statistics showed that the United States added just 22,000 jobs in August. This also follows the ADP report that private employers just added 54,000 jobs in the month, which were both well below expectations. So, what this means is more people are out of work for longer. Job openings also have dropped to a 10-month low. Now, your question is probably, well, why does this matter? The weaker labor data helps the mortgage bond market improve, which in turn is helping mortgage interest rates trend lower, which is welcome news for homeowners and home buyers because the Federal Reserve closely monitors this, both inflation and employment, when making interest rate decisions. And we've been hearing for a while that a couple rates are coming to be cut. We do know that in September there's one that's planned. The next one would be later in the year. So when inflation is high, the Fed typically raises rates to cool spending. When the economy starts to weaken, rate cuts are used to stimulate growth. So Fed Chair Powell has noted that a rate cut is closer, which is kind of baked in. However, these numbers that came out really kind of are accelerating that thought process. So it seems fair that we will have a cut at the Fed's next meeting on the 17th. But a quick reminder on that. When the Fed adjusts interest rates, they're changing the Fed funds rate, which is an overnight short term rate that banks use to lend to each other. They don't directly set mortgage interest rates, but it does influence them and it influences other borrowing costs. So the direction of the 10-year treasury tends to point the direction of mortgage interest rates. It's not 100%, but it's a very, very good indicator of where we're going. The 10-year yield dropped to 4.08 today, which was down, I want to say, roughly about 25 basis points. So that's a big drop. So if you're thinking about buying or refinancing, or just want to better understand what this means to you, this window of opportunity may not be open very long. So let's connect. I'm here to help. Eric Foley, Bell Bank Mortgage, NMLS 502070. Go Tigers.